Okay, hello guys. So today I just want to show you a quick recap on the trades I just took last 2 days. Last week, I mean. So this is on GBPUSD 1 hour time frame. Alright. You can see first thing when I open my phone, I just want to show you how I trade, okay? So the first thing I did is I used to check which trend are we when trading the market. So for now you can see this market is in a downtrend, okay? So if a market is in a downtrend, what are we expecting? We are expecting more of sales, okay? If the market is a downtrend, we should always be looking for a selling opportunities, okay? So a lot of beginner traders, when they enter the market, like most of the beginner traders, when the market is a downtrend, they will be looking for buying opportunities, and then the market will always be stopping them out every single time. So the best way to avoid this thing is by moving with the trend. What I mean by moving with the trend is, if the market is moving in a downtrend, it will be making a break of structure, lower highs and lower low, lower highs and lower low. So if the market is creating a lower highs and lower low, you should be always be looking for a selling opportunities, okay? So I just want to show you the market I just did on this GBPUSD particularly. So let me take this tool distance, let me see. Okay, let me start with this one. You can see this market. When I saw this market break this one, I already know that this market is moving in a downtrend, break of structure, lower highs, and then the market will try to create a lower low, lower highs, lower low. This is how the market is moving. And you can see this one again. This is also a break of structure, okay? Break of structure, BOS, then a break of structure. And then anytime a market creates a break of structure, it will create a supply zone, which we call it order block, okay? And then this zone, I'm going to draw it, this order block. Then I'm not going, if I draw the complete candle like that, this is what we call order block. But for now, since the market has a wick, I'm going to draw like the wick. So the wick, we call it a rejection block, okay? Rejection block. Then the other break of structure, let me draw the supply zone. Let me draw the supply zone. For this one too, it has a wick. It has a wick. So I'm just drawing the wick only. I'm just drawing the wick only. If an order block has like a very big rejection wick, right? You only draw the wick, okay? So this is the market I just did last 2 days. So let me tell you something about the order block. An order block, it normally has a criteria that it must have before it becomes a valid order block. For example, these two order block here, same. Both of this order block has a small gap. I know you can see it, right? You can see this one. Let me draw it. You can see this one. This order block, it has a gap. It has a gap too. And you can see this one too. It has a very small gap. So I know someone can ask me, which order block will he place an order when he found himself in this kind of scenario? Okay, let's say you find yourself in this kind of scenario and you don't know where to put your sell order, okay? Let's say you want to place your sell here. Sorry, let's say you're anticipating you want this market to come to this zone, okay? Let's say like you don't know what really happened here. So for me, if I see this kind of scenario, the first thing I will do is I will check where is the liquidity. You can see in this zone we have a liquidity here. We have a liquidity here. So like I said in the first time, the order block, it has its own criteria, like a gap and a liquidity and a break of structure. Once you have this kind of confirmation, you don't need to like place your order in the extreme order block. You place your order in the second supply zone, so that you have and you put your small stop loss, so that the market you can trigger it fast as possible, and then you can make your own profit. Okay, so your stop loss is normally above the order block, very small, above the order block, tiny. Okay, and then your take profit is normally at the liquidity, at this liquidity. You are seeing it, right? And this is what we call the sell side liquidity. So this is it. You can see it. You can see it. So this is the market. I just check it last 2 days, and then you can see how the market plays out. You can see, I know some of the beginner traders, they are looking to buy like here, like this. They will say this and order block like that, blah 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 blah, and they will be looking to buy it here. No, you always move with the trend, or you will always get stopped out. This is what I always used to say. And then you can see this one too. This is another market. Okay, this is another market, and this is what we call the liquidity. That's the sell side liquidity, and then the upper zone is the buy side liquidity. Okay, what make me let me show you what I did when I see this thing. And then I know this one too is a liquidity trap. You can see this also a sell side liquidity, and then the upper there is an order block, and then we have a gap too, and then this is our gap. So I was looking to sell at this gap, the main threshold of this gap, because the market will always fill this gap. Normally will always fill this gap. So the main threshold here, once I saw this opportunity, I was even very confident that if this market retraces back to this fair value gap, I'm going to place a sell, and then my stop loss is just above the gap, okay, above the gap, like 10 to 15 pips is okay for the stop loss. And then for your take profit is the last low, the liquidity. The last low is the liquidity. Don't forget. You can see. So this is how I normally trade. Okay, and then I saw some people get stop out in this market. This is, don't forget, this is GBPUSD. I see a lot of people are stopping out from this market just because they don't follow the quiet lessons I used to give them. Okay, so you see this is an order block, right? I just draw the order block, and this is where a lot of people stop out from this market that day. You see, and this is what we call the liquidity slash inducement. Okay, and then like I said earlier, for an order block to be valid, it must have a gap. You see, this is what we call a gap, break of structure, inducement. And then look at what happened after the market triggered the order. It moves straight back to the take profit. Okay, you can see, straight to take profit, straight. And then normally our stop loss will be like 15 pips or maybe 10 pips is okay, right? And then you can see how the market plays out. You see, very beautiful trade. So I hope you have learned 1 or 2 things from the lesson I just shared to you. This is like a small tips I'm just sharing to you, how I normally trade, how I look at the trend of the market, and how I perceive the market when it comes to day trading. Okay, so for now on, go and practice what I just showed you, all these breakout structure, inducement, order block, and so on and so on. This is what you guys should go and practice, and then you can be improving every single day, because they say practice makes improvement. As you are practicing, you are improving. Okay, every single day you should be practicing this thing day by day. Okay, day by day you should be on your chart every day and be checking the possibilities, the movements, and everything that the market is going to present. even on Saturdays and Sunday, you shouldn't like leave the chart. You should be looking, anticipating, checking the daily time frame, making your move, trying to find your edge on the market. This is how we did it, okay? And then remember, do not trade against the trend. Had it been like, I know a lot of beginners will like here, they will say this is a market, this is a market shift, this is a market shift, and then this zone, they will take this zone like an order block, and then they'll place a buy limit there, okay? They'll place a buy limit here, and then they'll be expecting the market to reach all the way to their take profit. And look at what the market did. The market put them in small profit, and then later on the market hit their stop loss. So all I'm saying is that you shouldn't be trading against the trend, okay? If the market is a downtrend, always be looking for a selling opportunities. And the same thing applicable to if the market is an uptrend, you should always be looking for a buying opportunities. So I hope you learn one or two things I just shared to you. So let's meet another time for some educational activities. So thank you all.